Invite the second corporate and trading hour today. As we told you, it's a power-packed show. We've got IIFL Finance on our radar on the back of its Q3 numbers. The company has seen strong business momentum with an improvement in the asset quality. To discuss the quarter gone by and the way forward, we're joined by Kapish Jain, the CFO, to take some questions for us. Mr. Jain, morning and thanks so much for joining in. First, the big question, right? What's the loan growth going to look like going ahead? What's the guidance that you could share with us? We've seen an improvement in asset quality. Can it sustain? And interest rates are rising. So your thoughts on NIMs and the ability to protect it?
Yeah, thank you very much for having me here. So for us, the key is consistency. If you look into the trajectory of the last 5 years, we've seen all. We've seen COVID, we've seen the crisis coming with regard to liquidity as well. But we have been able to maintain a CAGR growth of 25% in these 5 years. Going forward, we believe we'll be able to maintain that and make sure that we are consistent on our delivery and performance. So that's one point with regard to the loan growth. With regard to interest rates that you mentioned, yes, the interest rates have actually moved up. And we've seen that hike happening both from the repo side and from MCLRs. For the change that has happened till date, we've been able to pass it on to our borrowers. And more particularly and importantly, we've also been able to rationalize our own cost of borrowing. So while the market has moved up from around 250 basis point on the repo to 100 basis point on the MCLR of the bank, we have been largely in line with our borrowing. So our borrowing costs have maybe moved up by around 15-20 basis point overall because of the active management that we do on the borrowing side. On the NIM, given that we have been able to pass on our rates hikes to our borrowers, we believe we'll be able to sustain the NIMs that we have given to the market till date, and we should be able to manage and protect it.
And asset quality?
On the asset quality side, on the asset quality side, yes, across board, we have seen markets improving. We have seen more particularly the credit cycle is showing better signs. There's a lot of activity happening on the market, resulting in recovery showing better signs as well. So from an active management on that front as well, we should be able to get our asset quality in line to what we have given into the market. We've seen improvement this quarter, and we believe we should be able to keep ourselves on a gross NPA of near around 2% and a net NPA of near around 1%.
Okay. Kapish, hi, Surabhi here. I just want to get into the breakup of the business, the breakup of the book itself. Home loan, which is obviously the lion's share for you, it's the big chunk. There, quarter on quarter, there's a dip in disbursals. Is that just sort of, the usual seasonality kicking in? Or is that a conscious decision right now? Is it a change because of rising rates? If you could just give us some more details on home loans first.
Yeah, so on the home loan front, there have been some change in our approach and strategy. If you see, while the overall disbursement numbers might show a little marginally lower number, but we have done more disbursements. Our average ticket size have come down. A number of units that we have financed has gone up by around 10%. So the overall action and the activities in terms of volume has been there. And this quarter, of course, was little muted on the overall number more because of the holiday season which came in the last quarter. But then we don't see any dip coming in the disbursement numbers with this transition happening on lower ticket size and lower unit size as well. We should be able to get to the momentum of disbursements going forward as well.
Okay, just one more point on the sectoral breakup. You seem to be going very aggressive and very strong on the MFI sector. I mean, that part of the book, it's still small. MFI is about 7,800 odd crores. But the growth, if I look at disbursals year on year or quarter on quarter, the growth in that book seems to be very, very strong. So again, this is by design. Where do you intend to take this up to?
So if you look into the guidance which has been given, if you look into the last 5 years, this business has really not moved anywhere. More particularly for the NBFC space, the numbers are at the AUM level for NBFCs are same what they were in year 18 and 19. We've seen COVID and we have seen some of the floods which happened in few of states and some of the other interventions which came in, resulting in this sector not growing. So there's a lot of pent-up demand which is there, which is coming in now. And even the forecast that comes in from external agencies, they suggest that the growth should be in the range of around 25-30%. We think we are well placed. We have done expansions of our branches and our distribution is fairly strong there. And we are trying to just monitor and monetize and tap that particular built-up that we have done on the infrastructure side, which is causing this growth. So if you look into a 5-year cycle, this growth has been a little muted. But if you just look into the recent cycle, you'll see that the growth is a little fast. On the regulatory side, there have been a lot of positive development which is causing this growth to come in. the regulator has given up the embargo on a price cap which was there at 10% of your cost of borrowing, realizing the fact that this market has to be priced with regard to the risk that you take on the book. That is enabling you to better price these assets. There is some limitation which has been removed on the household income to which you can give this loans to. You can also manage this business better by doing more of secured lending, which was earlier capped to lower. It's now moved up to 25%. With these kinds of positive development coming from the regulator as well, is enabling this market to go with a better risk-reward pricing, which is causing the growth to come in. And we believe that there's a good cycle of growth coming in. The more particular thing which we'll always be very particular about is to make sure that we are managing asset quality fine and we are having a good tap on our early delinquencies and our PAR numbers.
Okay, Kapish, since we're talking about the different segments of the book, on the gold financing, that's also seen a good growth, compared to last year. It's up around 25%. But can you tell us why the disbursal to AUM ratio is so low? I think it's come in at just around 6%. So can you tell us what's happening on that front?
So I'll tell you, I'll come back to the first question. The gold business is again a hugely untapped market. On a big picture understanding, we'll realize that 65% of the market is still going towards the unorganized segment. The key here would be to make sure that you are present in the local geography, you have expansion, and you are clearly approachable to the local catchment to the market. We have expanded a lot. We have added close to around 500, 600 branches in the last 6 to 9 months, which is enabling this disbursement growth to come in for us. On the AUM too, I'm missing that number that you're talking about on disbursement to AUM. But from a core sector perspective, it's a prominent segment for us. And with right pricing, we think we'll be able to sustain the growth that we have today. Some of the expansion in housing and microfinance would have taken this lower number, but I don't believe there's too much of shift happening in the overall share of the AUM for gold business. Okay,
just quite last single word question, Kapish. Given everything that you explained on MFI, let's say over FY24, what percentage of your book will be MFI?
So currently MFI as a percentage of my book is around 10-12%. We would believe that we'll be keeping us on a similar range. It's at a lower base, so therefore the growth is looking a little higher. But the overall share of this business would be at around 12 to 13% range and shouldn't be higher than this, even for 24-25.
Okay, we'll leave it to that. Kapish, thank you very much for joining in. That's IIFL Finance for you. By the way, look at the recovery in the broader markets. The mid-cap index is up 1.3%. The small-cap index, the Nifty small-cap index, is up close to about